Hey guys, Sean here. So Goldman Sachs has come out and increased their 12-month gold forecast to $2,150. In fact, they say gold could even hit $2,500 if inflation moves structurally to 4%. Now, this bold claim comes in the face of incoming interest rate hikes and with the Fed also about to reduce their balance sheet in the months ahead. Now, this is in contrast to another bank, JP Morgan, that predicts gold will crash to 1520 instead. So who is right? Will the price of gold really increase when less money is being printed? And if you're a gold investor or stacker, what does it mean for you? So in this video, we'll take a closer look at whether a bull market for gold is really building and a better way to value gold instead of just fixating on the price. Let's dive in. I think we already know we can't totally trust price predictions from anyone, but it's always interesting to see what banks like Goldman Sachs are saying, especially releasing such a public statement to the world. So, according to Goldman, while there's not yet talk of a recession, our economists forecast a material deceleration in US growth, while the imminent prospect of a new hiking cycle is leading to a risk off environment across long duration asset classes. If we cut through all this mumbo jumbo, they basically believe that people will be moving away from risky assets, perhaps from high growth tech stocks, maybe away from Bitcoin, into safer assets like gold and silver. And I think there's some truth to that, right? So if we look at tech stocks like Facebook and the tech heavy Nasdaq, they have been down heavily since Jerome Powell has announced the rate hike earlier this year. Facebook has crashed by 35%, while Nasdaq is down by around 10%. And if we look at gold, it's actually up by over 1% during the same period. And I think this is very important, guys. It does highlight that money could be leaving these riskier assets and moving into something more real and tangible, such as gold. So is Goldman right after all? So the thing about predictions from banks is that there's normally an agenda behind them, but it is not always nefarious, right? I think Goldman sees that there's a big shift from risky speculation into real assets like gold coming soon, and the worst thing that can happen for them is their clients to just get out of their risky positions and just sit in cash, right? Remember, banks make money off transaction and advisory fees. And if their clients just sit their ass on cash, no one wins, right? Inflation will just eat up the value of their dollar, and Goldman doesn't profit from transactions. So it does make sense for them to actually point out gold as an option for their clients to invest into. So not everything is a conspiracy. Now, if you are like me, you probably want something you can track to see if gold is still a good buy or not. Not analysts just throwing out numbers like spaghetti on the wall. And there are three indicators that I pull out of my back pocket every time I feel confused. It's not 100% accurate, but it does give me a good idea of the sentiment of gold and if I should continue to stack or maybe just hold off a bit. Now, the first is by measuring the real interest rates. So it's no surprise that an interest rate hike will happen, and that is traditionally bad for gold. In fact, the market has at least three interest rate hikes priced in at 100% this year. That means the price of gold might have already absorbed this news, and unless we go above three hikes, not many people will be shocked. I think it's better to track the real interest rates instead, which is simply how much money you're earning on your cash if you put it into a bank account after factoring in inflation. So if we look at the highest interest rate bank accounts today, the best we can see is around 0.5%. And if we minus it off the CPI inflation rate of 7%, we get an interest rate of minus 6.5%, and that is the real interest rate. It's a very scary number, which means that your cash is actually losing 6.5% of purchasing power every year, and that is why I believe the demand for gold is still strong. I remember buying some gold back in December and January at around the 1780 levels because I believe that controlling inflation won't be that easy. How much can the Fed hike to actually bring down inflation without crashing the economy, right? And that is why even though stocks are crashing, holding on to your cash is also risky. And that is why I continue to hold gold, guys. It's a time tested to preserve value over thousands of years. And if mainstream investors do wake up to this, we could see a lot of money moving into precious metals. The next indicator I look at is the US national debt and the money supply. So something historic has just happened lately, and it's not anything to be proud of, right? The US has now broken past $30 trillion in debt, and it will only continue to go up. Now, this is very scary because sooner or later, there will be no more money left to borrow, the interest to pay back the debt will be immense, and the US dollar might come crashing down. And if you look over here at the price of gold, if we divide it by the money supply, we can see it is almost $22,000 an ounce today. But it's really no surprise, right? There are really big consequences for printing money, and in fact, the money supply has almost tripled to $21 trillion since 2008. Now, I'm not saying that gold will reach 20 grand an ounce, but seeing the amount of money just sloshing around in the system, $2,500 gold doesn't seem like much of a stretch in the long run, right? As long as I see the money supply keep expanding and Congress continually raising the debt ceiling, I think there will be no end to this madness, right? It won't be long before we hit $40 trillion and then $50 trillion in debt, and that is why I am still a buyer of gold in 2022 and beyond. Now, the final indicator and my personal favorite is to track what central banks are doing. If we look outside of the United States, a lot of central banks, especially in Asia, are snapping up gold, and it makes sense. Banks traditionally used to store their foreign exchange reserves in US treasuries because it was thought to be safe. But now there's not much point in holding the US dollar, which loses purchasing power every single year, right? Central banks are all about protecting the wealth of their citizens, and that is why I believe they buy gold, right? Every time they see the US government actually continually printing dollars, I think that is really spooking them out. And the thing about gold is that it holds no counterparty risk and it isn't dependent on the US government doing the right thing. And that's why we can see countries like Thailand, Hungary, Ireland, and even Singapore aggressively buying gold in 2021. So, unless I see the big boys like China and Russia suddenly stop buying gold and central banks offloading their gold, I'll personally continue to build my own stack, right? I'll be my own central bank and protect my wealth as much as I can. And that means getting more of these beautiful gold coins. Now let's talk about price for a bit. It's very easy to get obsessed with the price of gold, and I also fall for the same trap. So if a bank predicts gold price to soar, we get happy, and if the price forecast is back, we might all start panicking, right? I've been there and done that, and it just gets tiring after a while. I believe that the price of gold is more of a reflection of how much the dollar is getting debased and not really a good measure of the true value of gold. And because in today's high inflation environment, the price of everything from your toothbrush to a can of Coke will eventually go up, right? So I prefer to actually measure the purchasing power of gold compared to other assets, right? What can I buy with an ounce of gold today compared to yesterday? So here are two measurements I track. The first is the S&P 500 to gold ratio, and we can see that at its lowest, I could actually buy one stock of the S&P 500 for 1 ounce of gold or less. And most recently, that happened in 2011, and I won't be surprised if it happens again in the future, right? So today, the ratio is around 2.5 is to 1. And that means if a major stock crash happens and money piles into gold at the same time, we could see this ratio close and the purchasing power of gold actually increase even though prices might fall across the board. And the same goes for the real estate to gold ratio, which shows me how many ounces of gold I need to buy an average family home. So it's around 275 ounces today, but if we look back, it was under 150 ounces back in 2011 as well. And I have a funny feeling that history might repeat itself. So I believe if you really want to understand the true worth of gold, or actually any asset for that matter, it's really helpful to measure it against other stuff and not just focus on the price. The thing is, price predictions are really fun to discuss, but anything could happen. I think we need to watch closely in March and see how gold will react to the rate hike. I believe that might be a small drop because the market is kinda just waiting for an excuse to correct. It's like a powder keg just waiting to explode, and the rate hike could be that spark. But if the price of gold does resist the rate hike and stays firm like how it did earlier this year, then I think it's a good omen for gold. 2022 is going to be one of the most volatile years, and we should really keep our emotion in check. If you look at the price of gold, it's not like the S&P 500 that just gently climbs 5 to 7% a year, like a gentle carnival boat ride down the stream. It's more like a violent spike up, a long consolidation, and then another big spike up. Now, if we look at the price of gold, we can see the consolidation could be ending, and there might be a big move coming soon in 2022. So, whether it's a big spike up or down is really anyone's guess. Another black swan event or crisis could just be around the corner. We don't really know for sure. But to me, the long term outlook for gold really hasn't changed. And until the world starts respecting money and stops printing dollars into oblivion, I will continue to hold gold for years to come. So there you have it, guys. Every time there's a price prediction, I think it's best to revert to the fundamentals of what really moves gold. Gold could fall to $1,600 this year or smash past $2,000. No one can say for sure. But I think the long term picture is still strong. I believe investors might start moving away from all these risky assets and speculative plays and run to safe haven assets and inflation hedge like gold. So what do you think? Do you agree with Goldman's price prediction, or do you think gold will face challenges and even fall this year? Let me know in the comments below, and if you enjoyed today's video, be sure to smash that like button and subscribe for more gold and silver videos. Thank you guys for watching, and I'll see you soon.